Hello, I'm Michael Konnert. I'm the founder and CEO of Vizsla Silver. We're traded on the New York Stock Exchange and in Canada under the ticker VZLA. And we are developing the world's largest high-grade undeveloped silver resource at the Panuco project in Sinaloa, Mexico. This is a very exciting year for us. We've added a lot of mine development expertise, and we're taking the project very rapidly through studies, including our PEA, which is upcoming in the next few months, into test mining and then later a feasibility study. So we're leveraging a lot of the existing infrastructure at the project here to ideally make one of the world's largest single asset silver primary producers.
And I'm Dan Dickson, the CEO of Endeavour Silver. We're also listed on New York Stock Exchange under EXK and on Toronto Stock Exchange under EDR. We're also in Mexico with two operating assets, the Guanaceví and Bolañitos assets. They produce 9 million silver equivalent ounces per year. It's also an exciting year for Endeavour. We're developing the Terronera project in the state of Jalisco, also in Mexico, also epithermal vein systems, just like our other assets. We expect to be in commissioning for this year to double our production and cut our cost profile in half.
Okay, guys, thanks very much. Welcome to London. What are you here doing?
We're here marketing our companies at a Raymond James Silver Conference.
Okay, good. And how are you finding those? Are there generalists here yet?
I haven't seen any.
No,
you definitely looked.
Yeah. I'd say over the last couple of months, a lot of the precious metal funds been calling and interested in looking to kind of deploy what they have of capital, but new faces are yet to be kind of showing up at these conferences. So
right, okay,
it's coming.
So this conversation is really for investors perhaps have not invested in silver before, and people maybe not even in precious metals before. So I want to talk about some of the cues that they should be looking at, some of these variables. I'm going to start with obviously silver price. It's gone on a bit of a run over nearly $32 this morning. Where's that come from?
I think it's being pulled up by the recent move in gold, but I think it's driven by two things. It's demand from the East. I think BRIC countries and China specifically, I think are driving precious metal prices higher. But we're also seeing the industrial applications of silver being so important. The growth of solar panels, increasing the demand for industrial silver. I don't think can be understated. It's really quite incredible.
Right. Well, it was always mooted as coming, but no one quite believed it. But do you think that's like a kind of big driver here, or is there a bit more stockpiling going on?
Well, what's interesting, and I was at the Silver Institute breakfast in Mexico City about a month ago, and they were going through all of the supply and projects like Terronera and Vizsla's far a few years out from that, but there's really not very many new places for silver to come out as far as supply goes. And, a lot of the existing supply is being diminished, whether it's byproduct production in South America, these big open pit copper mines, or even silver primary mines, it's just not increasing to what we need. So it's the third year of a significant deficit now for silver. And a big driver of that is, this excess demand is actually churning through the above ground stockpile. So some estimates a few years back said there's about 2 billion pounds above ground. We're probably more than halfway through that now.
Right. I mean, we're hearing this a lot in most of the commodities, in terms of gold, copper, nickel, you name it. We're running out of this stuff. That's always been the cry of you guys, since I've been doing these interviews. But when you're talking to these funds, I mean, what do they expect from you? Why do they want to invest in companies like you, other than there's a silver shortage coming down the line? What are they looking for?
Well, I think the biggest thing is leverage to the silver price.
Right.
A few dollars move in the silver price, you have a doubling in the stock. It's just, hypothetically, I'm not saying specifically to all companies, but if you go back and look at the last three bull market cycles, we saw a couple of things. One, we saw silver lag behind gold and eventually outpace the move in gold and then reach a new high. And in those times, companies like Pan American and Endeavour, went up 10 times or more. Right. So I think that's what people are looking for. But at the same time, that's kind of this short-term move. I think also what investors are looking for is companies to profitably produce this metal that's going to be so important for the future.
That's why I was asking you the question. As a developer, you produce your own developer, but as a developer, they've got to believe that you're going to get this thing over the line. So the message from you to them is, yeah, we are, and at scale.
Yeah, exactly.
That's resonating. Right. Do you agree with that?
Yeah, a couple things that just, Mike talked about with regards to kind of silver always historically has lagged gold, and then the fact that gold moved through 2,400 pushed silver, I think, in the same thing into the $30 range, which is still an 80-to-1 ratio. You look at the ratio over the last 35 years, it's averaged 65-to-1. Ultimately, we're still right at that precipitous of the start of that bull market. We want to see that ratio contract down, at least get into the 70s, 65s. And then if we get into that 50 ratio, well, then we really know we're in a bull market. I mean, from my standpoint, I think the gold moving through and obviously making all-time highs and getting through 2,400, people started to go, okay, historically silver's always lagged, and now it's starting to catch up a little bit. With that and what we've seen from an industrial standpoint over the last couple of years, shortage and creating deficits and eating up what we have above ground, I think what's coming right now is people are going, okay, if the monetary story comes back, the amount of silver available for the monetary story, the investment story, is a lot smaller than it was 15 years ago. So there's going to be a lot more juice there for silver to really push well beyond its all-time highs of $50. So we're seeing all-time highs for gold. We haven't seen that yet in silver.
So do you think, again, there's a kind of audience out there who's looked at what's happening with lithium. I know lithium's a nascent sector in a way, certainly, and it's a much smaller sector in a certain way. So you would say to that audience, again, that's not going to happen here with gold or silver because we need more of it, and we don't know where it's going to come from.
Yeah, I think silver is a bit different than gold. Silver's got both the industrial aspects and the monetary aspects. And I think right now in the last 3-4 years, maybe even longer, silver's traded as an industrial metal. And obviously there's less transparency when it comes to the silver market because it being mainly a byproduct out of copper mines, gold mines, and not much as primary silver. So if copper really moves and silver doesn't, more silver is going to get produced just because of the copper mines. I just think the story around the industrial aspects of silver is phenomenal. The juice really comes into our space when that monetary story is there. And I mean, for the history of mankind or governments, we know there's debasement of currencies. And right now, everything's been okay. We're trying to start to see treasury yields maybe roll over and trying to see what the Fed's going to do come for the rest of this year into next year. I think that's kind of the start of kicking off more from a monetary standpoint for silver.
So I was talking to this, a golf fund manager the other day, and they had the concern over what's happening with gold. So lots of central banks buying gold, like a lot of gold for the last 12, 18 months, really kind of ramping up on that front. What are the kind of controls for silver? You got the industrial usage, I get it. I don't know what the ratio is there. What is
so 500 million industrial, 300 million left for investment.
Okay. So what are the other kind of control levers available to governments or other influencers in terms of the way the silver price moves?
For me, it's the U.S. retail market. U.S. silver bugs really move that market. I mean, obviously, from a central bank standpoint, there can be purchasing for silver. You don't get as much literature on silver being invested by central banks, but it happens. It's that U.S. retail investor that really moves it, and that's when those guys come in. We're really going to see that movement in silver price.
And what are they looking for? Where have they been?
Well, I would add something interesting came out of that silver survey breakfast presentation is that actually in India, the uptake of silver is increasing as well. So as gold moves, it's being substituted as a jewelry and as a gift and as a monetary metal in India, which is a market that's nascent as well. Like lithium, it historically has been gold dominant, but silver starting to grow there. So, I think it's the same thing. People, are probably sitting there watching their grocery bill double, watching gasoline go through the roof and say, well, I need some real money. This is scaring me. So I think that's where it comes from. And, more and more people, I mean, it's gold, but it's in Costco. You're buying gold in Costco. I didn't have that on my bingo card. But I think more and more the average person is trying to protect their wealth through buying monetary metal. And silver's always been the poor man's gold in the sense that far more accessible to buy.
Right. You guys are obviously selling equities.
Yes. And that's where you get the leverage. So
Right. Okay. So that comes to the leverage. We'll bounce around on the macro because I think it's a learning exercise here for a big new audience with, hopefully new money into the space. That's what we're trying to do with these conversations. I was going to give him the hard one to start with. Mexico.
Yeah.
Let's talk about Mexico. So it's been a kind of no-go zone. It's election year this year. People have said, well, there's no decisions going to be made. And all of a sudden, the silver price says, well, hold my beer.
Yeah.
Right.
Oh, my cerveza.
Yeah, hold my cerveza. And that's because you guys have seen a sharp increase and reaction in your own share prices as silver started to move from February, right?
Yeah. And I think, there's no jurisdiction that's free of risk, right? Whether it's Canada, there's been top tier jurisdictions that have had the most notable failures. You can think of, Pure Gold, the Madison mine in Red Lake of all places, Ontario, and that, went into receivership. So you have, I think, asset risk, you have political risk, you have other risks, financing risks. But Mexico, I think the asset quality makes up for the perceived political risk. And I say perceived because I actually think Mexico is one of the best jurisdictions in the world to actually build a mine. Two of the other silver primary producers that recently entered into production in Mexico, Silvercrest and MEG, were permitted and constructed and now are in production within this government's administration. And so the proof is, contrary to the sentiment, I think. And we also saw, what I think it was a low point in Mexico sentiment in the fall of last year, where there was talk about an open pit ban that it was added to mining reform conversations, both of which I don't believe will be enacted. I think this new government will likely be much more favorable to mining. I think both parties understand the value that these metals have for the energy transition, and I think both parties want to see Mexico be a participant in the energy transition. So I suspect that part of the re-rating that we're seeing in Mexico-based equities that have to do with mining is part of this improvement or, coming out of the low sentiment trough that we saw last year.
Right. What about you, Tom?
Yeah, no, I think Mike summed that up very well. I mean, we're a little bit different. We also actually had a mine permitted and started construction during this administration. I think AMLO's been saying some of the things to speak to his base as a populist, and I think that goes away when if Claudia gets in, which is the expectations here in a couple of weeks with their election. I've always said, I don't even know if it's perceived, it is a better jurisdiction than Canada, the United States, when it comes from discovery to permitting to getting a mine into operation. It's well documented. The timeline's much shorter. Yeah. They're trying to bring in increased regulations in Mexico. Their mining reforms were done very poorly. They've lost all their court cases with regards to it. We thought that they were going to rescind those before the election. It looks like it's probably going to happen after. The Supreme Court's going to rule on it relatively shortly, and it's expected that the current government will fail on those reforms. So I think those reforms could be a good thing, to be honest. There's things that they need to improve. Water management's very key in Mexico going forward and will be for the next 25 years. More regulations, better improvements on reclamation of mines, more controls over tailings dams, et cetera, is always good for the industry long term. I think Mexico runs behind Canada and the U.S. when it comes to that stuff. So it's not bad things that they're trying to put in place. They're just trying to catch up almost to the rest of North America. Again, the geology speaks to it. 200 million ounces of the 800 million ounces we produce in the world comes out of Mexico. So it's a very important jurisdiction from a silver standpoint, from a mining standpoint, globally. And again, our experience over the 18 years that we've been in Mexico has been very positive, a lot more positive than some of our counterparts in other jurisdictions. The long history of mining in Mexico, probably because of foreign ownership controls until 1993, a lot of the exploration techniques didn't make its way down, which made a lot of prospective areas for a lot of the North American or Canadian U.S. companies going down there and making discoveries like these guys did. So again, I think it's a very favorable jurisdiction. The sentiment wrongly because of some of the things that the president said, but they didn't actually impose anything that actually restricted it. We've seen slowdowns from a bureaucratic standpoint, getting through permits. Hopefully that improves with the new administration. We'll see.
It's kind of interesting. I say there's been sort of general sort of mood of caution about South America in the last 2-3 years, off the back of electioneering, off the back of sort of socialist rhetoric. But at the end of the day, I guess, not a case of money talks, I know it's the wrong phrase, but the ability for business to contribute to the local environment and nationally, either through taxes, jobs, etc., is really, really, really important. And I like the fact that you were saying we kind of want more regulation, we want better controls, we want to do better.
Yeah, I think as a mining industry, we're around for a long time. Mines generally last 30, 40, 50 years, and things are going to evolve over those 50 years. And there's our higher standards in Canada. We try to bring our Canadian standards down into Mexico, whether it was from a labor standpoint, environmental standpoint. And like I say, the 18 years we've been there, those have improved in Mexico, and they can continue to improve. Doesn't mean our cost of business is going to increase.
Yeah.
We have lawyers, we have environmental teams, sustainability teams that all work for us. So to add on more layers doesn't add cost for us necessarily. It makes some barriers to entries for new participants, but I think most of those guys can get through it. If you have a good enough deposit, you're going to be able to handle those regulations.
And you've handled it.
Well, and I think, there's nothing like mining to create wealth in rural areas. There's no other industry that does that so well. And I think, governments recognize that, despite, it's pretty easy to pick on mining. We're an easy target, I suppose. But, if you're actually sitting there and thinking, how do I, improve the lives of the citizens of a country? Well, there's nothing better than mining to do that.
Yeah, no, for sure. And I think miners being held more accountable is a good thing. I think, I like the way you're asking for it, because it's so easy for NGOs and, social activists to perhaps pick on one or two examples and maybe slightly skew the story. All good. For you, were you at all nervous over the past couple of years about a single asset approach to mining? Because you've got a couple in the US, right?
Nope, we have two operating assets in Mexico. We have Bruner in the US and Nevada.
Right, that's what I'm talking about, optionality over that. So I'm saying, did you ever conscious during that period over the last 2 years and say, well, perhaps we need to jurisdictional de-risking, given the conversation we're having?
I think it kind of goes back to just asset quality trumps. It's very, very hard for us to find something of equal quality in really any other jurisdiction. I know because I tried before we went down to Mexico and consolidated this ground, and this is the best thing we saw. So in years of looking, we're kind of we're willing to ride with the ups and downs in Mexico and do what we think will create a lot of value, which is driving this project forward.
Never in doubt. Never in doubt.
Well, of course, you lose a bit of sleep here and there, but it's just you have to look at your options, and I think committing to something that has the potential to be world class is worth doing.
Right.
I think also with that, like once you do have a potential world class asset, they're not easy to find.
No,
it really isn't. And so once you got one and you think you got it, and you got to put your investment there, and there's only so much resource allocation you can have, especially as a junior exploration company, right? Like you've only got so much labor and expertise inside your company and dollars to go around, that you don't want to spread yourself too thin going, okay, I want to reduce jurisdiction risk, because quite frankly, with their project, it's going to bring a lot of value if they could bring that forward.
Absolutely. And just sort of sticking with, again, how you manage the company during good times and bad. Obviously, it's been a difficult 3 years for, I think, all equities, not just precious metal equities. The cost of capital during that time, you've had to, all companies have to make choices about, do I take it when it's there? Do I try? I think things might improve and I'll get a better cost of capital, if I wait a bit. I don't think anyone's been able to kind of call it and get it right, but we've seen a few train wrecks, and we've seen a few people actually utilize that capital and actually be able to move the company forward. I mean, how was it for you, and how do you envisage being able to operate in a high-price silver environment?
Well, that's always, for a company without revenue, we're reliant on the equity markets, to move forward, to pay our employees, to keep the project moving. There's a lot of moving parts, so that is certainly the I would say one of the most stressful parts of the job. And, you end up getting some angry phone calls when you're just doing what's in the best interest of the company, whether, but that's okay. It's all part of the job. So, we went from a higher cost of capital, doing a unit financing, in 2022. Markets were very difficult. Then we were kind of a little bit in a corner we had to get out of. And then from there, been consecutively better financings at, better terms, less discount, and no warrant. So, as the quality of the project continues, the cost of capital goes down, and, you're never going to make anyone happy, but you need to look at things through how you.
I know your chart was good, Jay, in quite difficult times, and it certainly bucked the trend of a lot of the smaller explorers for sure.
Yeah. And we've been very fortunate. We have incredible shareholders that have been extremely supportive for over the years, and continue to do that. In hard times and good times.
And was this always frustrating to you in terms of whatever headlines you put out? It was kind of like this market went whack.
The higher the grade, the worse reaction almost. It was kind of bizarre world, but it is what it is, and you can't swim against the current in these things. You just have to adapt and try to protect your share structure, minimize dilution, and maximize shareholder.
What about now? Things have changed. Well, obviously only for a few months, but let's be positive.
Well, I think for us, we're following in your footsteps here, and we're starting to look at debt financing, project finance, for how we take the project forward. We're pre-PEA, so it might seem a little.
Was the end of this year?
Yeah, PEA should come, I think in a few months here around so in Q3, I would say.
Q3?
Yeah. But we want to make sure that, we're creating these relationships with debt providers and getting ahead of, any type of issues, whether it's equator principles, things like that, making sure that we're in the best position to lower our cost of capital and minimize dilution for shareholders. So we're always thinking about that. That's such an important part of the job.
Right, and just because you're producing money doesn't mean you've got no problems. You've got your own set of challenges, which is obviously backfilling, reserve numbers and getting after new resource. So what's it been like for you the last 3 years?
The last 3 years are just similar kind of nights when you start thinking about resource allocation and cost of capital. And for us with Terronera, the lowest cost of capital was one of the key items that we went through. With the European banks and going through equator principles and trying to lower that cost of capital. And sometimes it creates a lot of hurdles and financial covenants and other covenants that we got to go through. And I personally am an accountant by trade, so I don't mind that stuff. I like the discipline it creates. And quite frankly, it allows us to open up more markets in that sense. And once you're creating cash flow, you want to dilute your shareholders as least as possible. In our space, it's such a volatile space, especially with silver and mining. What you learn in school, the 2/3, 1/3 debt to equity, is probably not the same in our space. And so I've tried to kind of limit how much debt we want to take, and we're taking on $120 million of a $270 million build. So it's kind of around that ratio. And now with where prices are, we can get out of that debt relatively quickly, and that gives me a lot of strength, I feel. But it's built that relationship to go for the next project for a lower cost of capital. And I think that's just moving around in the life cycle of a mine or of a company, and that the debt is eventually a tool that you can use to benefit your shareholders. We've raised equity to build over the last 3 years, and like Mike said, there's days where it's like, well, it's what's in the best interest of the company. You still get shareholders that are quite upset that you've issued some equity. Quite frankly, if you don't issue that equity, you might not have a company. You're in a different spot and you're selling when you don't want to sell. So it's our job to kind of manage that and get a feel for the market. Obviously, when things are on the uptick, that's a lot easier to do, and obviously a little bit more fun and a little bit more strength from our side. But in the last 3 years, you just got to go through all your contacts, talk to your shareholders, make sure you understand where the market is, and then execute, believe in what you do. And then ultimately it still comes down to executing the business. People always ask me, are you worried about the share price? And yeah, I worry about the share price, but it's not my first concern. First and foremost concern is, are we executing what we say we're going to execute from a business standpoint, be as efficient as possible with our capital. And if we do that, the rest of it will take care of itself. So there's times you start worrying about share price and you want that over the long term. But I think investors nowadays, everybody's worried about their quarterly results and what's happening in the last 3 months. And I try to block that out and not worry about it. And it's what's 1 year, 2 years, 5 years down the road look like. And we bought the Pitarrilla asset for $70 million 2 years ago, $17 silver. And now we feel like we're pretty smart guys. We might not be as smart as we think we are, but I think it's going to be something that eventually comes into our portfolio that we got at a good price at a good time.
I think Napoleon said it doesn't matter lucky general either. So whatever it is, it still works. Just on the producer side of the coin, as it were, you're kind of a sort of hybrid in the sense you are a producer, but you're also then building out as well. So perhaps you are using up money. You've got to use up the money for that build. But once that build is finished, which is when, by the way?
Q4 of this year.
Q4 of this year, right? It's then. What is the goal? Accumulate cash and shore up the balance sheet for a period of time to kind of show that consistency. What's the goal?
Yeah, no, our goal is ultimately to become a senior silver producer. So, and just for your audience, I mean, when you say we're kind of a producer versus a developer, our producing assets produce at today's price is about $35 million of after-tax cash flow. Terronera at these prices will do about $120 million of after-tax cash flow. So it's a significant change for us as a company.
Yeah.
The end game for that is, okay, we'll go to 15 million ounces silver equivalent production. We do have two other assets that we've built up resources. The Pitarrilla asset, we've got close to 600 million ounces of silver plus zinc plus lead. We're looking at it from an underground standpoint. We'd like to move our development team from Terronera and be done at the end of this year and move into at least scoping and economic studies for Pitarrilla and bring that online hopefully before this decade's out. So that would allow us to grow from 15 million, 16 million ounce silver equivalent to 23 to 25 million ounce silver equivalent. We also have the Parral project, also in Mexico. We've defined close to 60 million ounces there. That's something that we can bring on too. So our goal is to be a senior silver producer. When we get to that point, then what do we do with our capital? So we can leverage the cash flows from Terronera, hopefully into debt and to building Pitarrilla, but we've got a lot of work left to be done.
Right. So I guess from now on, it's kind of organic in that sense, and the ambition and intent is still there. So that's quite aggressive.
Yeah, very aggressive.
You got to be where you are. You said following or looking at what's happening over there. You want to do the same thing. You've kind of got the grade. I think you're starting to show the scale for sure on that. What does an aggressive, ambitious developer look like?
Well, we want to become one of the world's largest single asset silver primary producers, and we think that's achievable through the exploration and development of our project.
Sure.
So we have a district. I spent about a year in Sinaloa piecing together primarily the two halves of this district, and it was the first time it had ever been consolidated. And we only had about 30 drill holes historically, and we went in and we made very large high-grade discoveries quite rapidly, actually, and we continued to drill. We've drilled like 400,000 meters now on the property. We did that without ever having to build a road to kind of speak to the accessibility and the infrastructure there. So we've drilled, probably one of the biggest drill programs in modern history for silver exploration. We've turned that into a very large high-grade resource, and now we're taking that very rapidly through PEA. We have a target. We're hoping. If you look at some analyst reports, and I'll be able to talk about this with a lot more confidence after the PEA comes out. But we're looking at a range of 15 to 20 million ounces of production from just the western portion of our project. If you look at the district, the western portion where our resource is sits on less than 10% of the known veins of the district. We make new discoveries of veins, all the time. We're doing a lot of low-cost, high-impact exploration right now, electromagnetic survey, satellite imagery, these types of things. And we're going to continue to drill, the central portion of the district, the eastern portion of the district. I suspect that this will become a billion-ounce district, a billion-ounce high-grade district like San Dimas. Already a third of the way there, let's say. And we know that it's produced about 100 million ounces previously. I think this can be one of these great silver districts. So what we want to do is take our resource that we have with a low capex, take that into production, and then explore the rest of the district through cash flow.
Right. And has that thinking changed? Because when I first got it, when I came from senior banking down as the junior space, it was you guys, Canadians specifically, drill to the edge of the envelope. Let's see how big this thing is, and the market will reward us. And it did. It did reward guys like you for doing that. There's been a sort of change during COVID, where we moved from this globalization, globalization through to and just-in-time deliveries, etc., into we need inventory. We need to be self-sufficient and to be able to stand alone, because we all got harmed, I think, by that thinking before. And a lot of companies changed the business model. They changed the way they thought about where the value is going to come from. Getting into production sooner was a big shift in mentality and sentiment from Canadian juniors, it seemed to me. Was that always your plan, or how did you sort of, again, evolve and adapt?
You know, I think that was always something that we had in mind, and that comes down to, you know, I am Canadian, but you know, I hang out with a crew of Aussies. You know,
So yeah,
that's
okay.
a little different.
Show me the money.
You know,
Yeah.
You know, they love to take things into production, right? And you know, Craig Perry, who's our chairman, and then Simon Smirlik, who basically just sold Ausenco and then came to build our project as COO. You know, these are guys that cut their teeth at Rio Tinto, worked for EMR, you know, Western Mining. Simon built the Goro mine in New Caledonia. So, you know, these are kind of, we benefit from a kind of a diverse background of thinking, right, of different ways to do it. So when we saw what we had at Panuco, when we saw, you know, how reasonable the CapEx could be and what the production profile and what our AISC could look like on internal studies, you know, it was so obvious that we had to maximize the value, drive it forward, you know, as much as we can here. You know, I think, you know, perhaps times will change and perhaps someone will be willing to pay what we think it's ultimately worth. But until then, you know, we're maximizing value.
Okay. Do all boats float on a high tide? And by that I mean, is the silver price the cure-all? Is that the silver bullet for you, for all companies, or does quality matter?
Well, I mean, depends what you're looking for from an investment standpoint. Like
Return.
Yeah, but leverage means something, right? And a lot of people used to play in the Endeavour story because of the leverage to the silver price. So tight margins, but you think silver price is going up, that exponential growth in your margins benefited companies that had higher costs. So, I mean, the silver goes up, it does float all boats in the silver space, for sure, but others can benefit more than some. And I always say to people, like, it was great. I know a lot of people have played in Endeavour Silver's name just because of that volatility in our stock and the leverage to silver from managing a business and trying to grow a company long term. It's nicer to have consistent cash flows than the ups and downs. So I think in the last 3 years, we've really tried to talk and push Terronera into production with the idea that, hey, we need to have this consistent cash flow to continue to consistently invest in our future and grow the company and try to achieve what we're trying to achieve.
Right, and obviously it's going to be different according to what type of investor you are. Now, you're attracting, obviously, institutional money now, and you guys are talking to institutional money. And the generalists not back, I get it, but even the precious metal guys must have been holding their breath a little bit over the last 3 years. I know they've struggled to make money. Some of them, you know, had a lot of money withdrawn from them. Right now, to them, do they still feel nervous about the volatility of silver moving forward?
I think right now, it sometimes people look so short term that people enjoy the sentiment that's happening in our space. To go from $23 silver to $32 silver in about 9 weeks, people are feeling better. It's kind of a recency bias, I would say. Everyone I've talked to in the last 12 weeks have all been in good moods as opposed to 2023.
But there's their moment. Even they must be thinking this can't last.
Oh, you know what? And I've been with Endeavour for 17 years now, and there's 3 or 4 times in the history of Endeavour where you have those moments where you're like, "Oh, this is terrible," and you say to yourself, as soon as you say that, "This is it. This is the bottom, and I'd like to go all in here." And I think February kind of got to that point where, like, God, this is really tough. Like, a lot of people really don't care, and we had that same thing. We put out our first PFS on Terronera in 2016, and it was like, this is great. Crickets. Like, no one cared whatsoever. And you're kind of like, okay. And like I say, at that time, maybe a little bit in there, but March of 2020, when we had the big pullback because of COVID, it was like, God, when you really looked at it, you're like, oh, this is a great opportunity to get in. And I think in February, it's similar. There was that sentiment was so low. We're like, it can't get much worse. Let's go. And try to get in on that stuff. And I think it just comes with experience. The longer you're in it, you kind of identify those, and sometimes it's more gut than real thought. And it comes down to can you take advantage of it? And sometimes you can, sometimes you can't.
So what I guess what I'm trying to get at is silver very, very different? from other commodities, where sometimes you try and call the bottom on other commodities because they behave a similar sort of way in either annually, seasonally, whatever, and then try and get out of the peak. And the usual thing, we're not ride it down like we all do on occasion. Does silver to you behave differently? Would you advocate maybe looking at it differently to investors, or
I would?
It's all the same.
I think those psychological movements and your typical technical charts, which is based on psychology, it's for any commodity, anything in that sense. I think when it's frothy and everyone's telling you this is great, silver is going to be going to $300, you might want to take a pause and go, maybe it's time to get out. When it's like, hey, silver's going to zero, Endeavour is going to zero. Yeah. Okay, now's the time to go in, right? Like, again, those happen few and far between, but when they do happen, it's like, it's a light bulb moment. And sometimes it takes a couple of weeks to actually see it and get over your own fear of going, okay, this is going to zero. And then you go, hold on, it's not.
Yeah, I really struggled with contrarian investing advice over the last 3 years.
Well, one thing I think that is a little, you always can go to it's different this time, but what is actually structurally different is this deficit. Like I said, 3 years of
fundamentals
of deficit. Does that change things seriously here for silver? And I think it could. We're every day we're chewing through this above ground stockpile.
And that's the fundamental change that we've seen change from an industrial standpoint, the greenification and reducing carbon emissions. Silver is an important metal with regards to that. And so you do have a shift of paradigm where silver could last longer, but eventually it's going to end. There's ebbs and flows, cycles up and down. Hopefully this one's a lot longer. We benefit from that stuff, but there comes a top and it will roll over. How long it will be, honestly, no one knows.
They don't. A lot of people making a lot of money trying to tell you they do, but it's all good. I'm going to get you two to finish off. Give us a 2-minute sales pitch, talking to that camera as to why people should be investing in your stock now.
Well, I always say, and it's becoming a bit of a catchphrase now, that Vizsla is criminally undervalued. And, if you go back and look at an EV per ounce basis of, companies like Silvercrest and MEG, single asset producers, as they go through this development curve, you can see that that's the case. I think that there's a multiple times re-rating for the company here, as so much, of course, insiders been buying the stock religiously over the last few years. We're probably up to well over $6 million of insider buys in the last couple of years. So, we're convinced that this is probably the most undervalued silver developer out there. We have not only the resource grade and scale, but we have a huge amount of blue sky upside with exploration. We're going to start tackling that later this year as we prepare the company and the asset to move into production. So I think it's the most exciting explorer developer out there. We're well cashed up. We have a New York listing, which is really important, so you can actually capture a lot of that excitement that comes into the space. So I'm thrilled about Vizsla. It's going to be a great year for us.
That's fine. What about you, Tom?
Yeah, no, from Endeavour's standpoint, it's a transformational year. I mean, I touched on it right at the start of this conversation. The fact that Terronera effectively doubles our production takes us to 15 million ounces of silver equivalent, but most importantly, cuts our cost profile in half. I mean, the gold production out of Terronera will pay for all the silver. We expect to go into commissioning for Q4 of 2024 with commercial production of 2025. Behind that, we have the Pitarrilla project, and ultimately probably one of the best growth pipelines from an operating company is with Terronera and Pitarrilla. So we're very excited about Terronera coming online for the end of this year and hopefully to grow and to become a senior silver producer within this decade.
Guys, thank you very much for your time today. Really appreciate it. I like these conversations because it's real companies with real management teams with real assets doing real things. That's rare. So do appreciate your time today. We'll see you soon.
Yeah, appreciate that.
Yeah.